seconds before. We'll do it one more time. Make sure your trade is enabled. Press play. And then we're going to watch for 20 seconds to see the truth. Okay, start her up. YouTube is starting. 7 o'clock. I want to welcome all our YouTube members. We've been in the trade room for a little while. Thank you for joining. 10 seconds. So look, if I were going to cancel, I would not have my finger normally on the cancel button. 20 seconds. I have to call this trade a loser. Why? I don't think a normal person would have canceled in time, and they would have very possibly have been filled to the wrong direction. So I would say that if you traded this trade this morning, it might have been a loser. Now, Fred, did you find that you canceled before 20 seconds? How'd you deal with that? How did you deal with that? I'm just curious, because Fred, you said you were looking at. You're old and slow, but you avoided the trade, I thought you said. No, you canceled. No cancel? You did not cancel? Did you get stopped? Did you trade it live and get stopped? Okay, traded sim. Good. The DMM did not justify necessarily a live trade. Yes, it had 2 winners in a row, but it had 2 out of 3 losers before that. Okay? So it was a 50-50 trade. That's a risk. That's a risk. Very quickly, I tested the French trade, and nothing much happened on the French trade. And then the German trade, so I showed the setups off of the DMM, brackets of 5. So 314, this is French Flash Manufacturing Services PMI. This is a 10-second cancel, I believe. So that was filled within 6 seconds. This was not a good move. No follow through. It was matching news, okay, on the main news. Let me fix that. Yeah, go up further. It was matching news, I thought, on the main news. Let me check and see. French services, one of the news was matching, other news was a little bit negative. You could see it was not a very big offset. It was negative. You don't have much follow through. In playback, I was able, and it needed a 6-tick bracket, okay? It would have still filled you with a 6-tick bracket. We used a 5. And the recap of this trade is that with a little bit of patience, I was able to get out by shrinking my targets and stops. It went down enough to give me a total of 1 tick on 2 contracts, which was $12.50. So it was a flat break-even trade. In Germany, the same trade with different setup, bigger targets, 10 and 20, slightly bigger stop of 12, 329.59 entry with a bracket of 5 on Germany. The German report had been trading quieter than the French report recently, but today it was back to normal. The German report is usually more impactful. Here comes the German report. There's our bracket. Very nice move. Didn't fill, hits the target in about 5 seconds, gives you the opportunity to protect your profit. Now, sometimes you might want to move your stop just halfway as far as I move it, so that if you do get a pullback, you could still stay in the trade long enough to possibly get a larger profit. I did shrink my targets because I was a little bit concerned we didn't get a great follow through, but the news was negative, and then it does continue down. it would have been approximately $110 trade, very possibly, because it kept going. So to recap the German flash services manufacturing, the trade made approximately $110 in simulation replay. And I believe, honestly, that these two trades can be traded on a regular basis. They have been behaving all through the world crisis, okay? So if you're looking for extra trades, especially if you're an overnight or you live in Europe or California, that's midnight, those trades, right? For Californians and West Coast folks, the French and the German Euro trades is what I call them, the Euro trades. They are worth trading. Now, one more quick thing before we get to gas. We have not been trading U.S. Thursday unemployment claims because it got very inconsistent. Let me just show you. I'm rebooting my platform in anticipation of natural gas, okay? Let me show you this morning's unemployment trade. I replayed it, which I should have gotten up. I was up, I was just doing other things. I should have come into my trading office, and I like to trade live data rather than replay data. I think it's more real. I think it's more, what's the word I'm looking for? Reality. Well, come on, somebody help me out. More accurate. I use a bracket of 8, activation 8:29:59. I usually go a little bit longer than 10 seconds on the cancel. It's a target of 6. I use a target of 6, and I use a second target. You can use 15, and the stop is 12. Here's what happened this morning. It was a surprise bad news report. More people applied for jobs. I don't know why people are surprised. The economy, has been struggling with Delta. The Delta variant has people staying in. Restaurants are struggling. There's a lot of worry, but hopefully it seems to be recessing a little bit. But it has had a negative effect on the job market, possibly, which is a complicated market to begin with right now. What happened? So here's our 8:30 trade, gold, of quick fill. The news was negative. Gold goes in a negative direction. A very large trending gold move this morning could have had an impact on that. And then it hits the second target in a burst you can't even see with the naked eye. And you possibly could have had a nice little profit on that trade, potential $180, $180. And there's the news result, 30,000, 29,000 more unemployment claims. So a little bit negative on the job report. That's the recap for Thursday's unemployment claims. Okay, let me do a couple of quick things. So now we got to look at natural gas, right? Everybody knows last week was maybe the worst natural gas trade that we've ever seen in years. Not ever seen, but in years. It was maybe the worst. Now, I just want to make a quick comment also. Me being my usual off the wall, off the shelf, I did check Canada retail news, and it was a tradable move. Canada retail, a tradable move. Very interesting. All right. Canada retail. So let's get first question today is, what is the proper natural gas contract? So I know that oil just recently rolled, right? Let me set my news up, set my recorder up. We know that natural gas was stopped out last week. Okay, my recorder is up. I'm going to repeat that. We know that natural gas was stopped out last week. We know that natural gas had one of the craziest, most volatile, negative, lousy trades that we've seen in natural gas, maybe in years. I would say in years. Natural gas has been our friend for a year and a half. And last week, it became an enemy. It doesn't mean that natural gas will be our enemy today. The possibilities, in my opinion, are more probable for natural gas to be our friend today, because it rarely has stopped out in the past year and a half 2 times in a row, right? Now, I know that when people have a very bad losing trade, they are afraid to trade the same trade the next time it comes up. That is normal. I don't often struggle from that. That's not one of my big issues. And that's because, being the moderator, it's my job to trade. So I'm constantly trade. I don't care what happened the last week. It may determine if I'm going to trade live. It may determine if I'm going to trade sim. But I'm definitely, what happened in a previous week or month does not have a very great effect psychologically to me. Doesn't scare me that much, doesn't worry me that much. The way that natural gas reacted last week was so crazy. I'll show you the video. It was so crazy that it would be so unusual for it to do that again. Now look, it can do it again. Don't forget, natural gas, I've said it over and over and over and over. It could trade well for years, and then it can turn on you and spank you. And that's what it did. Now, I hope I have this video. Bear with me. Last week was, let's get the DMM. It was a stop. It was the 16th. I just looking for the video, so bear with me. Sometimes my natural gas videos, they just show up in the weirdest places, and I don't know why. 9/16. So bear with me. I will find this if I have to download it from the website. 2 more seconds. Might be in my download folder already. Yeah, it is. I apologize. Okay, so natural gas. I just want to show it to you because an insane move like this is so rare. This is the scariest thing that can ever happen if you're a news trader or an event trader. The market can move so fast, and it's rare that it happens, but so fast that no software anywhere in the world can keep up. It doesn't know where the stops are. It doesn't know if your target's been hit. It just creates errors and chaos, and that's what happened. Look at the move. It was a giant whipsaw in both directions in a nanosecond. It's an abnormal, very unusual for something like that to happen like that. And it just was absolutely a crazy move. And it can be it can cause you to lose money. Sometimes a move like that can cause you to make money. But you usually don't know what's happening, and you just want to close out the trade. Things are happening so fast, you don't know if your orders are hit because the software can't keep up. And it's not that there's something wrong with software. No software can keep up with a market that moves that fast. It's just reality. But that is an enemy, the worst enemy of event trading. Now, if that happened every day, we wouldn't be here. We wouldn't have a company, and we wouldn't be able to trade. But you see all the normal trades we take. But you have to understand that natural gas is more prone to that than other instruments. because natural gas, it just has a history over the years of sometimes acting very volatile. Also, natural gas is at all-time highs over and over and over. It's been making all-time highs. So there is risk in natural gas. Let's look at volume. See if we want to make sure what the proper contract is for today. So I have a little volume template that I use. I'm going to add natural gas 11, and I'm going to add natural gas 10. And we have a situation today that's called mixed volume, okay? It's mixed volume. You're not supposed to trade natural gas when you have mixed volume. That mixed volume rule stopped mattering this year, though, until last month. Last month, trading mixed volume caused a loss, okay? Why is mixed volume bad? If you see what's going on here, you don't have a tremendous amount of contracts being traded during the day to begin with. It's only 70,000. When your volume is mixed between two contracts, it means that your liquidity is lower. It's being cut in half here, okay? So I'm not allowed to trade natural gas today. It may work perfectly because it was stopped last week. So it's a very difficult decision today to trade it. You should take this week off because of mixed volume. Mixed volume can create a whippier move, more slippage, less accurate fills. Those are the reasons why mixed volume is an issue, okay? Everybody understand? Everybody get it? I was a little bit worried that today would be a mixed volume day because I knew that oil had rolled very recently. So, you know, I'm not here to purposely lose money. I'm not here to do what I don't think I would tell you not to do, right? I would tell you, if you're wanting to trade natural gas, I would tell you today to take the day off from the natural gas report as we trade it as a breakout because, excuse me, it breaks the mixed volume rule. It breaks the rule. There's one big thing, though, that tempts me to trade it. What is that big thing? It's the fact that natural gas got stopped last week and it's been trading so well all year, other than last week. And if you know, it's had normal stops when it gets stopped, and the opportunity is higher today for a good move and a safe move because it was such a bad move last week. So you have these two conflicting signals. Normally, so what's the right thing to do? The right thing for a new trader, absolutely, you don't trade when you have conflicting signals. Now, volume on 11 was significantly higher, and they're not, not 100,000 higher, but it was higher. So for a new person, a new trader, you don't ever go against a conflict, okay? You just don't. Because when you're new, the most important thing you have to do is build your confidence. So you have about 6,000 higher volume on 11. So I would trade 11 if I were trading live today. But as a new trader, you don't want to break rules. You don't want to do anything that has a conflict. So mixed volume, even with last week's stop, new traders, you trade in sim today. Family money traders, you don't take this as an extra trade today, okay? Because there's a conflict. Risk traders, traders with large accounts, traders that don't care if they lose on an occasional trade, traders that can't not trade because they need the action. I suppose you could take this trade with a little bit of trepidation because of mixed volume, all right? So that's my heads up. We decided, because of what took place last week in natural gas, that we cannot make natural gas a family money trade. It can be a secondary trade that some traders will trade, but because of that crazy potential risk, even though it's rare, it's such a bizarre occurrence and can really make somebody so uncomfortable. It just doesn't fit the family money profile of safer, better, reliable trades. And the irony and the frustration is that natural gas had been trading for the past year and a half without ever having that kind of a move. When I first started trading, okay, years and years ago, futures trading, I caught on to natural gas immediately. It was an instrument that I loved trading the report, but it was almost impossible to trade because it constantly did what it did last week. It was not like it was occasional. It was often. And then natural gas changed a couple of years later. I think that what happened with natural gas is the volume, the number of traders trading it got higher, and more people started trading it, and it became safer to trade. And I think that's one of the reasons that we're seeing now that natural gas had traded so well for a year and a half. More volume, better liquidity, less whipping, better trades. So I'm going to follow our rules because the markets have been difficult lately also. I think that, these are times to be wise. These are times to be careful. And these are times to protect your account until we see the markets get a little bit friendlier, okay? So I don't have any embarrassment in not taking a live trade, even though I thought I was going to go live today, but the mixed volume rule, it used to be a rule we never broke. Last year we broke it a lot because it did not have an effect, but it did stop us out last time that there was mixed volume, which was about a month ago. So I'm going to do what I tell you to do today. Yes, AJ. I don't know if I'm going to be able to get you to fix it today, though. Bear with me. So I'm going to trade one target for 8 ticks, one target for 12 ticks. The stop is 15. The entry time, it should not be doing that, AJ, but I would pass on this trade today because of the mixed volume. 10:29:59 is our entry time. 10:29:59. I'm doing what I tell everybody to do today. Be safe, okay? I'm going to be safe as well because we want to keep an eye. We want to keep an eye on natural gas. Maybe also. What happened last week was so radical that it might not be an idea to keep a good eye on natural gas. Let me see if I can find how to solve your problem. Give me a second. You need to find the merging of your data. The problem is your data is merging. Okay, go to options, go to trading. Nope, hang on. Go to options, go to market data. Okay, AJ, go to options, go to tools, go to options, go to market data. See the global merge policy? Put it on do not merge and okay it, and then retype the instrument, reload your chart, and that giant line will be gone. Tell me if I'm right. I believe I am. That giant line will be gone. Tools, options, trading data, do not merge. That will solve it. Okay? So I would like to trade natural gas today. I really would. I think there's a very possible opportunity for a normal trade, but there is mixed volume. So you need to be mindful of mixed volume because it has created some chaos. Now, folks, especially because I'm not trading live, I have to leave the second this trade is over, okay? The second this trade is over. We have a giant webinar later, and I have an errand that I have to run, and it's far from here, so forgive me. I'm gonna have to run pretty quick after the trade. Here is the webinar link. So sign up if you would. We're going to give away to people that register 5 family money trades. The webinar is today, 4:30 p.m. Eastern Time. Okay. FMTs, family money trades. Right? And I'll definitely be back in time. All right, so let's check our time sync one more time. You check your sync by going into the website time.is. All you do is click time.is. That's it. Time.is. And if you're lucky, and I say it because not everybody gets put in sync by going to that website. That's why in the trade room file folder, you've got you know what, Steve? It's rollover. You can both. It's mixed volume and it's rollover. It's not actually officially wrong. That is still the official contract for one day. But I trade what's higher volume, and right at this moment, 11 is higher volume. So if you want to be a stickler, I agree. But it's mixed volume today, which really means not to trade. In other words, rollover is tomorrow on natural gas. So the volume is 41,000 on 11, and it was 35.8 on 10. And that's why I have them both up. They both are totally tradable charts, but I like to trade the higher volume chart. I just do. That's what I like to do. Okay. Now I'm listening to Financial Juice. They'll tell us they're expecting a pretty large amount of natural gas to be in inventory, 75 billion. That's a lot of natural gas. That's a large build, okay? That is a large build. So we got 2 minutes, not even a minute and a half. Minute and a half. And like I said, I'm going to have to zoom out of here really quickly. So I'm hopefully set up properly on the left. Let me double check. I'm not going to uncheck it, so you won't be able to see it. It's a bracket of 5, a target of 8, target of 12, stop of 15. Looks good. $10.29.59. It's a 10:30 report. So what I was saying is because it was a stop last week, there is a possibility for a normal move. Also, because natural gas has been trading so normally all year and a half is the truth. That's a strong reason why it might have a normal trade today also. So we'll see. But prudence requires a safe approach, especially in light of last week, especially in light of constant new high after new high after new high after new high. So what did it do? Another crazy whip, right? It had a crazy whip. Crazy whip. I'm absolutely glad that we took this off, even though I'm in at the right direction. It was a crazy whip, not a good, not a viable trade, not the right type of trade. We have to keep a serious eye on natural gas because its behavior is dangerous, okay? It's behaving dangerously. It whipped up. If you look at the video, now I'm kind of waiting to see if it'll pull back down. If it will pull back down, it was almost matching news also. That often creates a bad response. So you have two different things creating a bad response. Virtually matching news, okay? 76 versus 75. And so let's see what happens here. Will it get down to my entry so I can close this out? I'll give it 1 minute. I'll give it 1 minute. Jody, did you do that live or in sim? Live or in sim? So if I look at my executions, my initial trade was it bought at 78 and sold at 38. It would have been a pretty big loser for me if that was real. But because this was a simulated trade, no way to know. No way to know. It was too fast. So I would close this out for a small trade, okay? Small trade. But that did not work properly because of the speed of the move. This is my point with natural gas. Now, AJ, you were able to get your target. So somehow you luckily survived. So that initial burst to the upside, I would think was less than 5 ticks. That's what that tells you. You cannot tell in a simulation always what natural gas does, okay? And this is the proof. So fast of a reaction. I'm going to show you the video real quick, and then I've got to scoot. Here's the video. I personally I did not trade it today. I thought the risk was too high, way too high. And because of the way natural gas moved last week, I want to see what happens. So here was the move. If you watch, I'm going to stop it. It almost looked like it moved up first. To my naked eye, watch closely. So the bracket 77 was the long fill. And it goes way above 77. I would have been filled long and stopped out short, okay? Filled long, stopped out short. And then because it was such a fast move, as it was trying to stop me out, it put me in short. And that's when I made the $30, okay? Very difficult natural gas. All the more reason why it's not a family money, and it's a trade that needs to be watched now. It's an instrument that must be watched, okay? The risk is too high. The risk is too high. AJ got lucky, AM got unlucky. Two different results, same trade. Too much risk, too much risk. Folks, I'll see everybody at the webinar, I hope, 4:30. Love to see everybody there. All right. Here's the link. I'll see everybody 4:30 p.m. today for the webinar. Take care, folks. Have a great rest of your day, and I'll see everyone later. See you, Joe. Take care.